Bitcoin is currently trading at $118,499. Across the weekend, it basically flatlined. The real question to ask, when Bitcoin came up and exploded like this, did we anticipate it would go higher or flatline? If you've been watching the last couple of videos, you already know the answer to that question. A lot of people inside the crypto market use leverage trading. If they buy at the wrong times, it doesn't take much of a move to absolutely liquidate their entire position and portfolio. Therefore, knowing where the structure is incredibly important. For example, let's just pop on the structural indicator for Bitcoin and see what is cooking. 3 days ago, I mentioned that there was a lot of structural overhead resistance on Bitcoin, and it was culminating around the $118,000 level. Many people anticipated that Bitcoin would just shoot up and keep shooting up and up and up. Getting caught into retail hype is very, very expensive, especially if you're leverage trading. If you've ever done leverage trading or you're doing it right at the current time, please leave a comment, "I'm leverage trading," and I'll see what I can do to help you out in future videos. Most traders lose because they guess. They rely on news patterns or lagging statistical indicators such as SMAs. But what if you could see where smart money was going before the move happened? That's exactly what CTKS structure is all about. Zooming into Bitcoin, we can see this 118,700 level is quite significant and substantial. We've seen some action across the weekend. Now, action across the weekend is typically under light volume. The real decisions on where Bitcoin is going to go will be made in the start of this week. One of the biggest problems when it comes to trading and investing are emotions. Emotions are the seat of losses. It's very natural for people's emotions to get really positive when the price is going up and really negative when the price is coming down. Typically, what happens is people want certainty, and they only get it pretty much after a big move is made. When they start to get in because emotion says, hey, this thing is good, it's going up. And that typically happens when people have no structural awareness. And what do they find? That certainty just reversed, and it reversed in a big way, put them in a loss position, made them panic and sell. The primary cause for a lack of consistent profitability is not a lack of intelligence or anything like that. It's a lack of systems plus a lack of emotional control. And emotional control is not what we talk about generally. Emotional control is kind of like, oh, that person needs to control their emotions. They're too angry or too whatever. It's not like that. Inside the markets, people get addicted to certainty. After all, you work really hard for the money that you put into the markets. And Warren Buffett famously said, don't lose money. Rule number 1. Rule number 2, see rule number 1. So listening to the greatest investor of all time, of course you would sell when the price moves against you. That is how you and I and everyone are programmed. The issue is that you need to break that emotional programming. Instead of buying under this certainty, wait for the pullbacks. But that's not just it. You must know where the structure is inside the chart that you're looking at. For example, a lot of people would see a lot of certainty in this move. So what the heck is that? That, my friends, is structure. For example, when we pop the indicator on, and you can get Bitcoin structural indicator from ctksmethod.org. But only if you want to be consistently profitable. So have a look at this. At the $119,000 mark, there was overhead structural resistance. I'm just going to zoom in there. So here is that $119,000 resistance level. What did price do? It came up through the 118,700 level and it tapped the 119,000. It was rejected down. It tried to confirm this as structural support, and we can see that it's currently failing to do so. Now, what is happening here? One thing to just realize, when you come out of weekend trading, the volumes are really light. That means it doesn't take much to push the markets in one direction or another. People are being told that Bitcoin is literally going to go parabolic, and Bitcoin does do that from time to time, but it also goes parabolically the other way after a certain amount of time too. You never miss out in the crypto space, but of course that doesn't help people sell a particular position, does it? The real issue here is that we either invest with structure or we invest and trade from emotion. There is no delineation. It's one or the other. It is structure or it is emotion. If it's emotion, you're buying every green candle and selling every red. And this, of course, is just a 30-minute. But what if it's a 2-week chart or a 1-month chart? Something like that. You're just doing the same kind of thing, but the implication of buying around the top is much, much greater in terms of the financial harm that it can do to you. So how do you get over it? And just think about this. These dotted lines, they look like any kind of dotted line that you would see on any chart, but they're not. This takes 2 levels of standard certification to draw up. Level 1 standard certification gives the foundations. Level 2 gives the secrets. They may appear just like dotted lines, but they are the most powerful signals in existence. And it does take time to draw up your charts. What I've done is to share the indicators with you in the daily channel, but it's good to understand that there's quite a lot of work that goes into creating those lines. Therefore, when we look at this particular chart, we know that these lines are the most statistically significant smart money and algorithmic buy and sell levels in existence. We can see currently the 118,700 level has been broken through. This has a lot of implications across the crypto market. The CTKS method is literally a set of techniques that you use end to end. What we've seen in the past 30-minute blocks right here, here, and here. So the past 2 hours, we've seen Bitcoin retrace. Now, what could happen to Solana? Because one of our beloved community members responded to my question, which particular chart are you trading or investing in? And they said Solana, so Jen, this is for you. It is not surprising at all that Solana in the past 4 sessions of 30 minutes or 2 hours has come down as well, because Solana gets its potential momentum from Bitcoin. Now, what you notice here is something really, really interesting. This very long candle, but this one is much shorter. Why is that? Because at 159.90, we've got heavier structural support. And of course, Solana has been marked up with level 1 and level 2 standard certification. That's why you can see these dotted lines here, which are called SLs or Stanfield levels. They are also called CTKS levels. For a rapid understanding guide, when you have thicker and more clustered SLs or Stanfield levels, that means they are stronger here. They're weaker when they're spaced out, and when they don't exist at all, they're called CTKS gaps. CTKS gaps get filled, and these are internal structural gaps, not discontinuous trading gaps like what you see in the stock market. So for example, something's there, it jumps up there, that's a gap. These are not those kind of gaps. These are gaps inside structure. They're very, very important to know, and we know them in advance. The other thing to know, CTKS levels or Stanfield levels you read from the right, not from the left, from the right. So this is a forward leading indicator of price. And there are a ton of free resources at ctksmethod.org. Please check them out. Now, what does it mean for Solana? Solana is coming into its own structural support levels. This is very important. You notice this big push down because of this negative CTKS gap. And of course, the momentum from Bitcoin was negative. So we anticipate Solana's negative momentum will also be there. Literally, without structure, you're just guessing. And if you're guessing, you're just donating into the markets. And that is not a pleasant donation. It's vitally important to also look at total crypto market cap. We've seen total crypto market cap put in a really, really good shake right here. That's brought the crypto market up. It's currently retracing. It swept a previous low. Now, what we need to understand is what is the structure. To do that, we must mark up all of price history with level 1 and level 2 standards. That gives us the most statistically significant forward-leading indicator of price in existence. This tells us where the algorithms are going to come in and play, and it's very important. So you can see that we had a positive CTKS gap on total crypto market cap, and you'll learn through the profiting course how to blend your knowledge of charts and read across charts. It is a very, very important skill. Literally, at the current time, at that $3.7 trillion mark, there are a lot of sellers. There's a bit of an absence of sellers between the 3.63 trillion and that 3.7. That's why we had a big push up. But don't forget, across the weekend there is light trading volume. It takes no money, literally at all, to push the crypto market around. From this and stacking probabilities, we have positive momentum inside the crypto market, a natural retracement. If Bitcoin can't get above the 118,700 mark, it's going to the 117,840. All you do is to look at structural passes and structural failures, and I'll do an in-depth video on this one later. If you're trading Solana, for example, a lot of people would just look at Solana's chart and say, this is all I need to do. I just need to know where the smart money is buying, where the algorithms are stepping into support price, which is 159.90, or they're stepping out to push price down. The sells are at 162.40. You know this ahead of time. You literally have the world's first leading indicator of price. The problem that people tend to have is that they chase price when price goes green instead of waiting to get filled at lower levels of structure. This makes a lot of sense because if you look at financial influencers, they're all about getting you to feel emotional. When emotion reigns, logic goes flying out the window. You can see that the market is not random at all, it is structural, and as soon as you understand the structure of the market, you can read between charts, you can stack probabilities, you're moving into the big leagues. You'll know that you're getting emotional if you're just listening to influencer stories and saying, okay, that means the price is going up. Therefore, I'll just put all my money in when I'm sure it's going up. And then it does this and you say, those damn influencers, they got it wrong. I'll sell. And then the price goes up again. Oh no, I was right in the first place. I'll buy again. And then it goes down. You get the idea. You cannot be emotional. You need to look across structural charts to understand how they're all moving together, because they do. If you were trading and investing in Solana, this would be called your money chart, because it's where you're putting your money in. With your money chart, then you need to go and look at total crypto market cap and Bitcoin as an absolute minimum, structurally. And looking back across time, we can see this 159.90 mark is a really good level to keep your eyes on. It's been significant for Solana. It is a safety net. Even when price does a structural failure and just plummets down, it plummets down into safety nets, which act like trampolines to push it back up. You must know where they are. Please let me know in the comments if you're trading something other than Solana or investing in it. Please let me know in the comments and I'll do what I did for Jen for you. Have a great day or night ahead, my friends, and keep looking at structure. And if this is the kind of content that you like and you're new, wow, hit that subscribe button because you're going to get tricks and tips here that you won't find anywhere else. And I have a very special surprise for you. Stay tuned.
In the heartbeat of the market, there's a secret code. Lines of power, zones of strength. It's the path we know.
We draw the Stanford levels. See the clusters form, thicker lines, stronger signs where the smart money storms. Gaps reveal the story of the orders in between. Excess volatility where the biggest moves convene.
When the candles find their places and the structure shows its face, we're not guessing or chasing, we're aligned with every trace. CTKS structure, guiding where to go. Smart money's architecture in every ebb and flow. Layers of liquidity in every zone we find. CTKS structure, the blueprint of the market's mind.
Topside lines hold the sells, bottom side holds the buys. Cluster strength reveals the depth where the order book compels. Stanfield zones accumulate, the heat is in the emotion. The more they come together, the louder prices commotion.
CTKS structure, guiding where to go. Smart money's architecture in every ebb and flow. Levels of liquidity in every level we find. CTKS structure, the blueprint of the market's mind.
From gap to cluster, we construct profits map, predicting where the market spikes will clap. Structure fuels our vision, turns chaos into science. We buy and sell with X-ray vision. That's our mission.
CTKS structure, guiding where to go. Smart money's architecture in every ebb and flow. Levels of liquidity in every level we find. CTKS structure, the blueprint of the market's mind.
In every chart we master, in every trend we see, we know intercorrelation, interconnection to assess direction, momentum, and smart money's flight. We make decisions based on structure, without emotion, the master. CTKS structure